Okay, so we're talking about Senate Bill 1044,
Yes.
sitting on the governor's desk.
Yes.
I want to talk about the why now. So this bill was described as a lifeline for different condo owners facing skyrocketing insurances, no coverage at all sometimes. What was the breaking point that made this piece of legislation urgent?
I think this has been a long time coming, but definitely the Maui wildfires played a part in the crisis. We had some major hurricane insurers pull out of the market and send hundreds of homeowners, thousands of homeowners actually, notices that they weren't going to continue to provide insurance. And so we have been hearing from condominium owners and homeowners across the state that it's difficult to find insurance, and the insurance that the lucky ones are being offered is way higher than what they are used to.
How quickly can Senate Bill 1044 really bring some relief to those communities before someone loses everything like what we saw in Lahaina?
We are hoping that there will be, that the program will, we are hoping that the program will be up and running and available to homeowners by this fall. We hope that we expect that the governor will sign the bill shortly. And the Hurricane Fund is already underway doing due diligence. These programs the policies need to be actuarially sound. We can't put the finances of the state of Hawaii at risk in case there is another disaster. And so that's very challenging. We do need to make sure that these policies have undergone due diligence, that the pricing is appropriate, and that there are sufficient reserves in case there is a disaster. The annual state budget is about $18 billion. That might not cover the property value of Waikiki. And so we need to be prudent about how we use state funds to provide insurance access. We need to be targeted, and we need to work with the condo associations and the homeowners to make sure that deferred maintenance is being done, and that everyone is making sure that their properties are secure and resilient and attractive for the private market to come back and provide competitively priced policies.
And I know there's a lot of we in what you're telling me, and I know you were one of the big head figures of trying to get this passed. When it comes to who's going to be making these policies, who are they going to be looking at and working with directly to make sure this is fair and not a situation where people are struggling more?
Well, so that's a good question. One of the big challenges right now is that because there are so few regulated insurers in Hawaii who are providing policies, if there's a rejection, a lot of these homeowners associations are forced to go to the surplus market, which are essentially foreign entities that are providing unregulated insurance. Most of them provide services for a fee. It's often going to be much, much more expensive than a policy that is regulated by the state of Hawaii, subject to final approval from the Insurance Commission before they increase rates, and that are subject to enforcement in the state of Hawaii.
Who's going to be the ones making these policies and making sure it's fair?
What the bill actually does is it reconstitutes the Hawaii Hurricane Relief Fund, which was the entity that was formed after Hurricane Iniki, after the hurricane hit in 1993. So there's a board of directors that manage the program. They ensure that the policies are sound, that they're solvent, and that the pricing is going to attract reinsurers globally to secure the policies, but also that we're covering the segment of the market that needs the most help to provide relief to homeowners, and attracting private insurers to come back and do business in Hawaii so that there's competition in pricing and things can hopefully get cheaper in the long run.
I really like the idea of this being a safety net for people.
Sure.
So going back, Lahaina, Iniki, after the Lahaina fires, many homeowners said they were left stranded by the insurance gaps, right? And after Hurricane Iniki, millions of dollars in relief funding were left unused for years, as we were talking about earlier. So what guarantees that these funds are going to be put to work and to actually help the people of Hawaii?
Yeah, so it's $171 million that was put aside for a rainy day, to be exact. So, it's raining. That fund was created. Homeowners across the state were assessed during that period of time. in order to create the fund, fortunately, over time, the legislature and the successive governors have not tapped into that fund and completely run it out. So there is this pot of money available to start providing policies right away. You know, as premiums are paid by homeowners, you know, and as time passes, hopefully without a disaster, you know, there's a likelihood that the fund will rebuild itself after we allot out this money to provide coverage. So it is important that we make sure that these policies are fiscally sound, that they're actuarially appropriate. And if you have a mortgage in a condominium or a townhouse complex where you need insurance help, what you know is that your bank, your mortgage company, will not accept an insolvent or, you know, like a kapakahi policy. You know, they need to be rated by Wall Street rating agencies in order for Fannie Mae and Freddie Mac associated financial institutions to accept them. So again, there's a prudence that we need to take. So it's going to take a little bit of time. We do hope that the program is available for homeowners this year, but we do want to make sure that we're moving carefully here and we're not exposing the state to some of the disastrous consequences we've seen in states like California and Florida when they were providing policies that were not appropriately financially backed, and then the disaster hit and victims don't have anywhere to go.
There's a lot in legislative sessions that comes down to common sense. And I think as a journalist, I've seen it for 10 years where sometimes that bill comes across the table and you're like, common sense. Is that what this is to you, where you saw millions of dollars just sitting there and thinking, now's the time to do something?
I do think so. You know, this program was created after Iniki. So there are many homeowners who remember that period of time after Hurricane Iniki when no one in Hawaii could get hurricane insurance. That's why they created the program. Fortunately, you know, after about 7 years, the private insurers came back to the market. They started offering competitive policies that were cheaper. And so people naturally just moved out of the Hurricane Fund program back into the private market. And then the program went dormant. So again, thankfully, we didn't raid that money between then and now. And so now when there is a crisis, we do have this pool of funds available to address this really critical problem. You know, we are in a bit of a squeeze right now because of the federal uncertainty. We're not sure whether we need to come back later in the year to shore up some of our critical state programs that rely on general tax revenue year over year. And so it's going to be it would have been extremely difficult for us to find $170 million to shore up hundreds of homeowners associations across the state. And also spin up, you know, the second part of this is to spin up the HPIA, which is the second program that provides general property insurance in case we have one of the large insurers decide to just leave Hawaii. You know, so this really is a safety net portion. If we have any more insurers, hopefully not, but if any more insurers elect to leave Hawaii because they're afraid we're a tsunami risk or a hurricane risk or now a wildfire risk, that we have something in place that can provide an option for homeowners right away. So I think you're right. It definitely was time for us to take some action, and I'm very grateful to the governor for his leadership on this and for my colleagues in the legislature for helping us make it happen.
Yeah. This one was robust. There's a lot of names involved. For the viewer tonight that's looking at this and they're going to be like, finally, but where were you 10 years ago? What's the answer to them?
Well, the answer is that, you know, this might not be the panacea either. We cannot promise that the rates that are going to be offered through this program are going to be what you were used to 2 or 3 or 5 years ago. What we hope is that you can get access when you don't, when you've been turned away everywhere you look, and your bank is calling you and saying you need to have insurance for mortgage purposes or we'll force place a policy on you from a foreign insurer of unknown price. You know, and also that hopefully that if we do this the right way, that these policies are fiscally sound and maybe more expensive, but cheaper than, you know, the alternative offshore from an unregulated market.
I mean, residents we're dealing with enough as it is, right? So
That's
don't
right.
need to be taken advantage of.
That's right. And this part of why this is a priority is that we know that many of the condominium buildings that are having problems with accessing insurance right now are homes for seniors, for kama'aina who are on fixed income, who are struggling to, maintain their lifestyle and deal with the cost of living already. So this is just one more thing that can potentially keep homeowners up at night. And so, it's going to take some time because we have to do it the right way. But you're right, it was time for us to take action, and I'm very proud of the work that we did this year.
Transparency, oversight. We did talk about the HPIA a little bit here. So who's watching over the HPIA and the revived Hurricane Relief Fund? Can homeowners see where this money goes and how the decisions are being made? So is this something that can be watched?
Yes, the Hawaii Hurricane Relief Fund is comprised of a board that were subject to Senate confirmation. They were approved in our public legislative session this year. They have public meetings once a month, and because things are ramping up and they're getting ready to offer policies, they meet more frequently. But those meetings are accessible online. Many of the legislators who are in the hard-hit communities who have a lack of access to insurance have been paying attention. So we can get answers. The board has to meet and disclose their decisions publicly. And we're going to continue to keep an eye on this. This is just the first year. We might have a good problem in that if the policies work and people sign up for them too fast, we may need to come back and find more money to expand out the program. Part of this process is to show that Hawaii is taking this issue seriously and that we're doing due diligence to try and attract the private insurers back to Hawaii by taking this segment of the market that doesn't have access. So hopefully that'll happen sooner rather than later, but we welcome, the public's attention. I think that's part of why this happened this year was because people are paying attention now.
Oh yeah, there was a lot of action this year. Going more into that transparency act of this, how can we make sure that this money is going to touch the people who need it and not just those with penthouses?
So, pricing insurance policies so that they can be attractive for reinsurance and that we're maintaining the right, cash reserves balance and premium payments are all really complicated, far more than I'm familiar with. So that's part of why we have a board with qualified insurance, people from Hawaii who are invested in Hawaii, trying to manage it. Part of the way the program is tailored, there are caps on the amount of coverage that individual buildings can apply for. There's a minimum amount of coverage that the building already needs to have. So the program itself is really tailored for buildings that are not 100% insured, that are underinsured. It's not meant to be an option for brand new buildings that are luxury high rises to come in and to be able to undercut the regular market. There's actually a requirement in the law that the premiums that are charged be more expensive than the cheapest private regulated alternative. And so we did work hard to try and put in some conditions so that people who don't need the help aren't taking advantage.
And I do want to get into how this is going to be used. Like, give me an example, a condo, 30-something years old, something's been wrong, they keep deferring, they're having issues. How will this work and what can they use it for?
So in that case, if that building is underinsured for their hurricane insurance, they can go to the Hawaii Hurricane Relief Fund. They can apply. If they already have more than $10 million of coverage, but they're short, the final $5 million, or they're short a significant percentage of coverage, then they can apply to the Hawaii Hurricane Relief Fund, and they can get the full coverage, so that they can buy and sell condominiums, so that their mortgage company is happy with them. If they're having trouble finding general property insurance, they can go to the HPIA, which should have policies up this year as well, and they can provide access to property insurance through that program. And if the building needs a major renovation or maintenance work, like fire sprinklers or water piping. There's a condominium loan program that's going to take us a little bit of time to get going. It should be available next year, that potentially associations can tap into to get lower cost financing so they can do those necessary renovations, so they can make themselves attractive for the private insurance market again. And then in the long run, that will bring costs down. So we try to build in different segments to address the problems that the homeowners across the state are encountering. And we'll keep working on it. You know, if we need to make changes in next year, then we'll come in and try to do that as well.
This bill, as written, really shows the safety net, but it gives the requirement of a long-term solution study. Mm-hmm. Why was that included, and what are we hoping to get out of that?
Sure. You know, insurance is a global business. The companies that are underwriting your insurance carrier for your policy on your house or even for your car, you know, they're underwritten by Wall Street financial institutions that are doing global risk management. They're looking at just the fact that we have larger natural disasters all over the world that have been coming more and more frequently and causing more and more damage. And so that segment of the industry is taking a step back at the moment and recalculating how much risk they want to take. That's basically what's going on right now. You know, I read a report last year that said that global reinsurance industry lost $100 billion a year in 4 out of the last 5 years because of the number of catastrophic natural disasters that have occurred during that period. And so, you know, the whole environment is riskier. What we want to do in Hawaii is show that we're taking the issue seriously, that we've set up appropriate safety nets and guardrails, but we've also provided a pathway out for buildings that, you know, need to get themselves correct so that they can make themselves attractive to that industry. And hopefully through that, by providing access to this segment of the market that doesn't have coverage, you know, we want to signal to the market that you can come and do business here and that we are a worthwhile risk to take, and that you can bring your policies back and you can charge reasonable prices for them, and that we're going to pay on time, and that we're a worthwhile investment.
It's hard to think of safety and insurance as like a supply and demand business, but yet here we are. And I think it's so crazy to think of it that way.
Yeah. You know, Lloyd's of London is a good example because they're a famous insurer that oftentimes will provide coverage for the knees of professional golfers or college football players or basketball players before the draft, just in case they get hurt. You know, they're the only guys in the world that provide that insurance. And so they charge what they charge, and that's it. And so that really is the challenge here, is when insurers see a risky area, which is what Hawaii looks like right now after the Maui wildfires, unfortunately, they can charge what they want or they can leave. And so what we want is more competition. We want them to come back. We want them to see us as a reasonable risk so that homeowners here in Hawaii have options. And they have the cheaper alternative. That's right. So that happened after Hurricane Iniki. It took some time. But luckily we have a blueprint for what to do. And so that's what we're doing right now.
Final public takeaways. When it comes to this, what are you most proud of? I think a lot of people are like, finally. But what is it for you that you're like, I really want the public to understand this, what we did?
Well, so we are trying to act responsibly here. You know, we can't risk the financial standing of the state of Hawaii by providing willy-nilly policies that, you know, make us go insolvent if there's a real disaster. We have to be prudent with the state's funds, but we also are very firm in our commitment to try and address the real crisis out there in the insurance market, especially as it's impacting local residents, often kupuna and seniors on fixed incomes that live in condominiums, that live in townhouses. And so we're taking it seriously. We're moving as quick as we can. And the solutions hopefully are coming soon.
Okay. Anything else?
No, that's all.
All right, thank you.
Thank you.